Hello everyone, welcome back to another Broker Daily podcast. Something a bit different today, as people who are watching the video will see my big head on their screens. We're going to be recording a video here in partnership with Wave Money. Alex and I have done plenty of podcasts together and we ramble through.
First time on film though.
First time on film, I know.
See, I see you've trimmed the beard.
I did. I had to look good for it. I got my suit on. Something a bit different though, because we figured it's a medium that we haven't really tapped into yet on Broker Daily, and we ramble through the uncuts.
We do ramble
every
through
Monday,
the uncuts.
but we don't really know what we're talking about. So we got John Flavell here, who is the founder and managing director at Wave Money, who is here to provide some expert insights.
There we go.
I thought great to have you here, John.
Thank
Look,
you.
we thought we catch up as you know every week. We kind of myself, Jack, and Phil, and I've had to elbow Phil out of the way because I'm quite keen to tap into your insights. But every week we catch up. We sort of muse over what's going in the news. But look, we're all media people and journalists. An opportunity to share with our audience just some insights into what's happening at the coalface, and also to understand a little bit more about Wave Money. We thought it'd be great to get you on. I've known you a long, long time. You've been in
I think it's 18 odd years or
a
something.
long
I was just
time,
thinking
yes.
back. We couldn't possibly be that old, could we?
Well, I'm sort of trying to grow a bit of hair at the back there, trying to hide my age.
Yeah.
But it's been a long time since. I mean, I came to Australia in 2001. It started, sort of straight in mortgage broking media, and I mean, I've seen the environment change a huge amount.
Yep.
You've been in a lot longer than that. You've been around. When did you start out?
Oh, I was actually just planning on that the other day. It's probably 30 years ago now, so
Wow.
95 or thereabouts. I had my first role in lending. I was what they called a home finance manager with Westpac, and the concept was you were mobile, which is marginally interesting because I think I had a mobile telephone. It was a brick.
Yeah, I'd imagine.
And I had a steam-powered laptop. I think it had valves in it, so you were mobile, but geez, I tell you, I think it carried a printer around in the boot of the car so you could print people's mortgage docs out as well. So that was 30 years ago, frighteningly, but there you go. It's been good.
You
Good
two
fun.
knowing each other for so long, I'm sure there'll be some great synergy. This is part one of a 4-part podcast series that we've got with you guys, which is quite exciting. I suppose today we're just sort of setting the scene, seeing what we're going to jump into.
Sure.
Is this your first time on a podcast?
Podcast, yeah, absolutely,
Yeah,
absolutely.
really?
So I've done a little bit of these sorts of interviews previously and what have you with Alex and others and what have you, but from a podcast perspective, I think I've got a great face for podcasts.
But podcasting's fun, and we enjoy it. Myself and Jack, and also Phil, because it's a conversation. It's an opportunity for us to chat, for the three of us, and I think the real value for our audience is they get a chance to kind of listen into a pretty relaxed conversation. It's not scripted. We've got an idea of some of the things that we want to touch on, but it's really about finding our way through, having an organic conversation, and sort of tapping into some of the areas that we find interesting to chat to. So
Look, there's a lot going on in our industry, as there always seems to be, and it's nice to have the opportunity to sit down with you and let's share some thoughts and maybe develop some insights and what have you around some of those things that are shaping the environment. It'd be great.
Before we kind of get into it, and I don't want to step on Jack's toes, I think it'd be really good to get a bit of an insight into Wave Money. I'm sure a lot of people tuning in will have heard of Wave Money, but may not know quite sort of where the business operates. But also, John, what sort of took you into that pathway? You've been around for a long time, so a bit of an insight would be good.
Yeah, sure. And as I said, at the risk of aging myself, I've been in this industry for 30 odd years now, or in retail financial services for 30 years, and other than 4 years where I was running the wealth advice business for National Australia Bank, I've always been on the broking side of things or on third party resi mortgages. And so I started at, as I said, Westpac as a home finance manager. I was at Rams not long after the deregulation of banking and the sort of the growth of non-bank lending. I was at Aussie when the sort of the real, I suppose, somebody lit the touch paper under broking, where you had lenders like Aussie and Wizard and others and Rams and not Rams so much, but Aussie and Wizard and others, they moved from being monoline lenders to distributors and broking, and that was 2002 and thereabouts, and that was fantastic. And then I ran the NAB broker business, working exclusively with brokers over a 9-year period or thereabouts, which is when I think I probably first met you.
We got to know each other well, and I can tell you now, my most it wasn't the first time we met. My most distinctive memory with you is when I came along. You'd just taken up the gig there, and we came along, and back then we used to do the third-party banking report, And back then we used to do it with RFI. And we came along and presented to NAB, and NAB was a really important, and still is a very important client of ours. And NAB had done horribly badly in the third-party bank. And I was thinking, oh no, I've got to go along and present. And we did our presentation, and I sat there just having to relay all this information. And you said, you know what, you haven't told us anything we don't already know. And from that point, you took NAB from being fourth in the third-party banking report to number one. So that was my first memorable moment of actually, sort of a formal sit down with you. We've met in and around the traps, but yeah.
Look, and it wasn't just me that took us from fourth to first. There was a group of fantastic people, and if you're lucky enough in your career, you have certain times where the right people came together and you delivered great outcomes, and you kind of reflect on those things as the good old days. And that was a cracking time. Hey, the other thing too was that, people said to me, gosh, why did you take that job? NAB's the last in terms of the majors and broker. It's like, why wouldn't I? It's only upside from here. Nobody else wants to do it. It's exactly the sort of type of role that you should put yourself into. And, when it's when there's only one way to go, which is up, and people don't expect much of you, then there's a whole lot of opportunity and there's a whole lot of people to prove wrong. So it was a great time. It was a good time to meet you as well. It was fun. Yeah.
And how does the background, so you've had a bit of a background in the non-bank space and a background with the majors, how does that differ?
Yeah. I suppose, look, as a funder, it's many things are the same. I suppose, your source of funds and what have you are different. And then, when you're part of a bank, you're running a big business, but you're part of an enormous entity, whereas in the non-bank space, so when I was at Rams or even now with Wave Money, this is our world. This is what we do exclusively. And, I think I've been also very fortunate to have spent some time directly in the broker space. I was the CEO of Mortgage Choice for 3 years. And so I really feel like I've grown up with the industry, and it's been a really fortunate, time to be in it. Over 30 years, the amount of change that's taken place is, almost inconceivable. And it's just been wonderful. And I've met cracking people. I've built, fantastic relationships and friendships that have, lasted 30 years and I expect will last a lifetime. I've partnered with people and seen them, build brilliant businesses and seen those businesses become multi-generational businesses, which is great. And then I think the other thing too is, if you get the opportunity to work in an industry where you can work with great people and develop careers and help them develop careers, that's fantastic. But if what you're actually providing to your end customer, the consumer, if that's delivering really good outcomes, then that's fantastic too. And so I think, some of the things I'm most proud of is to say that, in my career, I would have helped hundreds of thousands of Australian families achieve their objectives of, buying their first home and, creating places to grow and build families. I've helped people, build out investment portfolios. And you've helped people and their families grow and thrive and financially do well, which is a really nice thing. And so from an industry perspective, if you can do something with people that you like and enjoy, if you can be stimulated by it, but if you can deliver really good outcomes to your end customers, then that's fantastic. I don't know that it gets much better than that.
There's something very unique about this industry. And from a Momentum Media perspective, we operate in many different areas, from wealth to defence to cybersecurity. And mortgage broking, mortgage lending is our home, myself and my business partner, Phil, and we just love it. And because we see all of the different industry sectors, and mortgage lending, through the third-party distribution channel, it is just unique. You have to suffer ignorance from external forces on many occasions, whether it's the mainstream media that don't understand exactly what brokers do and the lenders that support them and how they change outcomes for borrowers. We've watched, mortgage brokers rise in terms of their value proposition for the consumer. Now, we're approaching, it'll be 80% of all loans going through brokers. And there's a good reason for that. It's because of the value that they deliver. So, and you talk about the great people and the people you've known for 30 years, but you just continue to see wonderful people coming into this industry. It is unique. We frequently come back. This is why I want to sit here and have a chat with you and continue working in and around this industry. It's just really, really special.
Yeah, it is. And it's interesting, you talk about the ignorance and people don't understand, but consumers get it.
Yeah, consumers
do.
They
If consumers
do.
didn't get it, then brokers wouldn't be originating more than 75 and towards 80% of all of the business that all of the mortgages that are being written are being originated by brokers with their clients, and so that in itself is incredibly powerful. And as I said, being able to deliver great outcomes to end customers is fantastic. But people don't necessarily understand that, and I'm going to sort of go out on the limb a little bit here, and I'm going to say the regulators don't understand it either.
I think you're right.
And it might come back to sort of bite me, but I think if consumers didn't sort of support mortgage brokers to the fact that consumers do just shows the value that mortgage brokers provide.
Yeah.
When I started, there was not long after, deregulation of banking. It was, a limited number of Aussie banks and a couple of building societies and so forth. So after the deregulation of banking in 91, the first of the offshore banks came, ING, Citi and so forth. And then that sort of competition that is created through broking. Australia had the highest real interest rates anywhere in the world back then. I think we had real interest rates of 3.5% or 4%. So on top of the cash rate, there you go. Consumers today would have been paying 8.5% for a blue ribbon.
Very fat margins.
Massive. And so it wasn't until, the competition that was brought into the environment through brokers, through non-bank lenders, the likes of Rams and Wizards and those that started, and the internationals, that changed. And it was back in, and I remember it was actually in December 96 where overnight, and I won't name the yellow and black bank that made the decision, but overnight, basically they cut their rates to the end customer by 120, 130 points. And I think the approach was the barbarians are at the gate. We're going to cut off the oxygen to them because, the new bank entrants and the non-banks have been differentiating their proposition on price. And they figured, we'll cut the oxygen off. We'll drop our rates and that'll be the end of them. Hey, what a great outcome for consumers.
Yeah, totally.
What a great outcome for consumers. But they didn't realise the barbarians weren't at the gates. They were inside. And consumers had already started to see the value that brokers could provide. And then lenders started to see, hey, you know what? We don't need to have this ridiculous retail bank presence across the country, 900 points of presence, all of them very expensive and what have you. We can actually be a regional lender and we can leverage the opportunity to distribute our products anywhere across the country. We can be an international lender without a branch network and we can leverage brokers. And so that really, that enabled an opportunity for competitors to come in and it's like any sort of market. The larger the number of competitors and the more open and transparent the market becomes, and brokers promote that transparency, then that delivers great outcomes for consumers. And you sort of look now at the sort of the interest rate margins on mortgages that the banks deriving, they're maybe 150, 160 basis points compared to the closer to 4 that there was prior to that. So it's a great outcome for consumers.
It's the borrower that wins.
And we love talking to non-bank lenders because they play such an important space for consumer choice, but also for the broker channel. They're often the major supporters for them. How important is that in your processes, supporting brokers?
Look, I'm putting my cards on the table. I'm broker first and broker always, and I have been, whether it was a NAB broker supporting the brokers or mortgage choice, running a broking business or at Aussie as well. So I am broker biased, and part of that is because, as I said, I think about the proposition that they deliver to end consumers. But if you sort of take a more pragmatic view about it, and you say, look, you can go direct to market, you can go online, you can sort of have a multi-channel sort of an approach. I think that realistically, for us, we believe in brokers. We believe that they will continue to be the most significant part of the market, and they deliver great outcomes for their customers. So I'm not going to put sort of feet in different camps. I'm going to focus, and we focus exclusively on brokers. That's all we do. You can't get a wave money home loan from anywhere else. So there's no conflict. And actually, there's no conflict in terms of where we spend our energy, our efforts and our resources. We are just focused on being the best non-bank lending partner that we can possibly be to brokers to enable them to deliver great outcomes to their customers. And that focus, I think, really sets us apart from many, many people. And they get confused. We don't wholesale, we don't white label, we don't play that sort of shell game that some of our competitors do either. It's a wave money product. There it is. It's delivered to you through your broker. At the end of the day, you know who you're dealing with, and we're there to actually just really foster that relationship and help the brokers deliver value to their customers, which is what we're all about.
I was going to say, just over the 30 years that you've been in the industry, and in the sort of the 23 or 24 years that I've been here, as well as sort of an evolution of the mortgage broking market, growth of mortgage brokers, and increasing preference for borrowers. Borrowers have also changed a lot. If you look at, how many people now have multiple sources of income. Yeah. You go back to so when I left school in the UK, you went along, you did an apprenticeship, and then you went and worked at Rolls-Royce for 40 years, and then you retired. It's a very different working environment now. One of the things I love about Australia is that there is plenty of work. There's consistently low sort of unemployment, and there are opportunities to maybe strike out and earn money in a different way. There are a lot of small business and self-employed people here. So the borrower demographic has changed, and this means that there are new challenges for lenders to fulfill those needs.
Yeah, or new opportunities if you look at it like that.
Yeah.
I think you're right, Alex, and that concept of you went to school, you got one job, and that was it, and you were there until you retired. That may have been the truth when you and I were leaving school, but it's not the case now. And so the way in which people work and has changed fundamentally, and also the proportion of people that are looking to build their own businesses. So if you have a look at the proportion of the workforce that are self-employed, it's 17% of the workforce in Australia is self-employed. Yeah, and that's the fastest growing segment of the overall market. And the fact is that for those people, their personal finances in many instances and their business finances are one in the same. They leverage their equity and their personal private assets to establish their businesses and build their businesses and grow their businesses and what have you. And the variability around their income is in part driven by what they're doing within the expansion, the investments within their business. And, when we started Wave Money, that's one of the things that we looked at. We said, there's a large group of consumers whose needs are just not being met by many bank and non-bank lenders.
Because it's hard, right? Because they don't fit in the box.
No, and people talk about the box and algorithms and what have you, and online approvals and so forth. Those systems are fine, but they don't deal with nuance.
Yes.
And if people are self-employed, or if they have a more complicated, employment structure, then those models don't deal to nuance. And that's where the opportunity for a non-bank lender like us comes in. And so over my time in the industry, I looked at that, and you saw the growth of self-employed. You saw the growth in terms of the way in people's incomes and earnings are shifting, and they don't just have one job, they have multiple jobs. They might move between industries. They might have commissions and bonuses. They might have contracts. They might have side hustles. They might have investment income. So all of those sorts of things, that spells nuance, yeah?
Yes.
And that sort of complexity, the ADI models don't necessarily deal to. And you say, well, there's a whole group of people out there who could value and who, we should be able to provide lending solutions to, mortgage lending solutions to. And if the ADIs don't do it, then that creates an opportunity for somebody, such as a non-bank, to do it. And that's where the opportunity exists. So in looking at that and even contemplating building a non-bank lending business, you say, is there a market there? Have I got the ability to deliver value to those people? And actually, is this a point in time, or is this something that we think is going to be locked into the system? So when we put Wave Money together, our thinking was there's a group of consumers that need some solutions. There's a fantastic group of distribution partners, brokers, that can deliver those solutions. Those needs aren't going away. They're not changing. Probably the population of people whose requirements fit in that space is only increasing. That's a great basis on which to say there's an opportunity that we should be involved in, and there's an opportunity for us to build a great business and support consumers and support our business partners by providing a set of solutions to people that just can't get them met.
Yeah, I think it's a smart way of looking at it, because if you look at the lending space, it's quite diluted. There's a lot of people out there. So for non-banks, having to compete with each other, honing in on a niche is very important, especially for someone like Wave Money, who relies on the brokers to be pumping business through their organisation. Was that something from the inception that you guys wanted to focus on the self-employed market?
Yeah, I think wherever you've got consumers' needs not being met, that's a great place to start. But then when you turn around and say, well, beyond the consumer, there's also the brokers that are endeavouring to meet those needs. So if I can provide something valuable to the consumer, but if I can also be a valuable business partner to the broker, then that's doubly powerful, if you like. So we looked at both of those things. And, what I found over 25, 30 odd years is that, the notion that everything, that you need to do, the decisions that you need to make can be automated and an algorithm it doesn't work. It'll work for a proportion of things, but when we're talking about the part of the market that we're talking about, where people's situations are varied and they're a little bit more complicated, then the models and the systems don't support that. And what I've always found, whether it was a broker or whether it was, CR Mortgage Choice, and speaking to brokers in the network there about the lenders they were working with, the ability for brokers to work closely with a lender, to have a conversation with the person that's actually making the decisions.
Oh, absolutely.
It's
priceless.
It's golden.
Yeah, and for the borrower as well.
Absolutely.
Because you look at the stress from the borrower transmitted through the broker, through to the lender.
Yeah.
Having that ability as a broker to say, we're talking with the person who's doing the assessment. Just knowing as the borrower, and I can tell you because I am one of those borrowers.
Yeah.
I'm a struggling small businessman.
Yeah.
But I've got a complicated structure, and
do.
it's very hard for me to get a bank loan, and I've used a broker for every loan I've ever taken out, and I rely on my broker. And even though I've taken out many loans over many years, I still go through the same stress because you've got to know that you can get the loan, and I know that whenever I'm looking to take out a loan, there's going to be one or two lenders in market for me in my particular situation.
Yep.
So access for the broker to the lender or the person within the lender is going to make the decisions is absolutely critical.
Yeah, absolutely. And look, if you have an effective relationship with your broker, and it sounds like you do, then, you're over your financial lifetime, the expectation is you'll probably have many mortgages. Yeah.
Yes.
Across multiple properties. And over that period in time, you might have relationships with multiple lenders. That would be my strong expectation. But you only need to have one relationship with one broker, which is fantastic.
Yeah.
And that kind of at the core, somebody that knows you, that understands the market, understands the environment, and can deliver the solutions and the outcomes that you want is incredibly valuable. And so from our perspective, we say, well, we have to provide a set of solutions for people where we think we can differentiate. And that's why we focus on, as I said, the self-employed and people with nuanced employment type backgrounds. But our biggest point of differentiation is the relationships that we have with the brokers. And we don't believe and we don't pretend that we can be all things to all people. But what we like to say to brokers is, look, this is us, this is what we do, this is what we can't do. And, let's have a conversation, because these transactions by their nature are complicated. Pick up the phone, have a discussion with the person that makes the decision, and let's work through and find a solution, because they're nuanced.
Yeah.
And guess what? You know what? During the process, things change as well.
Yeah.
And sometimes it might be by virtue of the fact that the applicant's been economical with the truth.
Yes.
Sometimes it might be virtue of the fact that there are, security valuations up, down, sideways, challenges and what have you. Or, people's circumstances and situations change. And so being able to pick the phone up and saying, look, the valuations come in soft. The expectation the customer had was here. It's actually here. We're looking at a higher LVR now, but there's still a solid, sound, proposition here from a lender perspective. Let's work through that together.
Yeah.
Or, there was some confusion in relation to the level of liabilities that the individual had elsewhere, or the structure. It's a trust. It's a company. Those sorts of things need conversations, and being able to pick the phone up and I'm not trying to sort of be a bugger, but being able to pick the phone up and have a conversation with a person that can say, I got it, Alex. You know what? We can find a solution. We'll get it sorted. We'll settle. We'll still settle it on Friday. I know the removalist truck's coming. We'll still settle on Friday, as opposed to picking the phone up, speaking to somebody in a call centre in another part of the world.
Being on hold for 2.5 hours.
And they'll say, and here's the policy. And it's like, that's fine. I understand the policy, but what I need is an outcome.
The thing is, right, John, I know, having been in and around brokers for so many years, good brokers usually can look at the customer, the client, the borrower, and they can usually do a pretty accurate assessment themselves. Now, of course, they're not going to make a credit decision.
No.
So when you're working with good partners in distribution, with brokers, they generally know. They know if this person is going to be, successful in terms of getting credit. So if you got a lender at the other end, where brokers have they've got it packaged up, they've got the documentation. And you say sometimes there's been some things that have been overlooked, disappeared or maybe not come through quite clearly.
Sure.
Sometimes I think maybe borrowers will sort of keep quiet about certain things on occasions. It's just human nature. But I think good brokers are really good at getting the confidence of the borrower, reassuring them that there's going to be a good outcome, reassuring they've got a lender at the other end that understands their particular situation. And I think for the broker, having the ability to win the confidence of the borrower, say, give me everything. We've got a lender that understands your particular type of borrower. Give me everything now. Let's go along and let's take it to the lender and we'll get the right outcome.
Yeah, I think that's absolutely positively right. One of the marks of success that we have for the business is I say to our team, and we've got a distribution team across the country working with our broker partners, and I say, you know what, a broker should be able to identify a wave money customer at 100 paces.
Yep.
I can see that person coming. I can see by virtue of their requirements, their situation, whether that's a wave money customer. And what does that mean? That means the broker should be able to say to their customer, I got you.
Yeah.
I got you covered. I understand your needs and I understand some of the nuances in relation to your requirements, but I've got a lender that I work with, that I have a relationship with, and I know I've got the confidence that we can put together a solution for you. And, from a customer's perspective, that's what customers want. It's the old,
totally.
Nobody wants a mortgage. They want a home. They want an investment property. They want to access their equity for their business. Sounds a bit trite, but it's true.
Yeah.
No one wants a mortgage. They just want a solution. So a broker being able to look you in the eye saying, hey, I've got a lender partner that's got a solution for you. This is what we're going to do. This is how long it'll take. Being able to say that is golden, and that was always my experience.
Your time will come, Jack.
Oh, is that what I was thinking? That's what you're saying to Alex when you're walking in.
As a borrower, it doesn't matter how many times you take a loan out. It is the most stressful thing. I mean, people talk about kind of the stress related to buying property and selling property, but it is about, you kind of have your aspirations. You're looking at whether it's your first home or an investment property, and people say, oh, investment property is not an emotional thing. It is still an emotional thing, because it's bricks and mortar, and if you're an investor, you love it. But that point where you've made that decision to go, the whole sort of getting finance is really stressful. So you'll hopefully sooner rather than later find out what we're talking about here.
We'll see.
You look like a wave money customer at 100 paces to
I
me.
think Alex is your kind of customer, the self-employed.
The last customer that anybody wants, I promise you.
Au contraire, but there you go. But that's incredibly important and valuable for the customer, and for a broker being able to do that with confidence is hugely valuable. Yeah. But for the broker to have that confidence, they need to have a relationship, and a relationship with a lender means, I think, that you basically you've got confidence that you can speak to a person that's going to make a decision, is capable of making a decision, and will speak to you and have a sensible conversation with you, particularly when things are nuanced. And it's about actually saying, does this make sense? Does this make sense? And from our perspective, that's what we try to get to. What's your customer trying to achieve, and how can we help them do that? And does this make sense? Can we put a solution together, whether it's buying their first home, whether it's buying their umpteenth investment property, whether it's accessing equity that they might have in their property for business growth or expansion, whether it's about saying this is someone that's in distress, they have multiple levels of debt across different institutions and they're paying lots of money in their cash flow. Can we provide them a solution by consolidating that and putting it together? It's great to, see people into the first homes, or see people into their umpteenth investment property, or see them access equity to grow their businesses. All of those things, we really focus on delivering to that. But some of the better things that we can do is when you see people that are in stress, and they may have gone through in a large number of instances, changes in life circumstances. Yeah. We see a lot of people that are going through divorce. Okay. And that's just a fact. And if we can help one or both parties to say there's a lot of change going on, families are being disrupted, but if we can help you retain the family home so that the kids can stay in their bedroom, and, that's a really good outcome. And so being able to work with people to deliver those sorts of solutions and saying, okay, maybe one partner was not at work and is, going back to work, and maybe they're the person that's looking to retain the family home. That's fine. So let's make a common sense decision around that. There's good equity in the property. The person has capability and experience in the industry. They're going back into the industry now. fantastic. We have one partner that's also willing to make child maintenance payments. That person's interested in their kids' well-being, and so why wouldn't be able to take that into consideration? You know, there's a spare room in the house, or maybe there's going to be 2 or 3 spare rooms in the house every other week, and somebody's saying, I'd like to bring somebody in as a boarder.
Yeah.
Why wouldn't we take that income from a boarder into consideration? So we do
Very
lots
good point,
of,
because you're looking at a really, really tough rental market.
it's
And I think,
incredible.
I boarded when I was working in London. I had boarded in a room. It's my wife when I met her, she had a boarder in her house in the UK.
That's what you called you, was it?
I didn't start out as a boarder.
Oh, I see.
Worked my way through. I just think, look, what's your? And I know we're only just starting out in 2025, but looking at your particular demographic of borrower, what's your thoughts on the outlook for the year ahead? For borrowers in general, but sort of specifically around that sort of self-employed cohort. Do you think it's going to be a tough year, or do you think things are going to get a bit easier for small business people?
Yeah, I suppose. Look, if you look at some of the macro things, so what's happening from an economic perspective, what's happening from a regulatory perspective, and what's happening from a housing market perspective. So from a macro perspective, then if you have a look at I suppose, inflation, everyone's been focused on inflation, and what does that mean in terms of the RBA's cash rate? And what does that mean in terms of, the cost of money? And so we've seen, the CPI figures, the Consumer Price Index figures, we've seen them basically, come down for both the September quarter and it also into December now, where you say, well, that's within the target range of the RBA. That's the Consumer Price Index. It's not underlying inflation. Underlying inflation is still stubbornly above 3.5. But if you put into combination with that, we've seen a slight increase in relation to unemployment. So unemployment's gone up to 4% in November, as opposed to the quarterly 3.9 as it was in September. So you think, okay, some of the monetary pressure that's been placed in the environment is now coming to bear. And the pendulum seems to be moving back to a position where the RBA would be more inclined to affect a change in terms of the cash rate.
Yeah.
If you have a look at market consensus now, and I think those are the two big things that people look like. As I said, underlying inflation still is a little bit high. But if you look at that, I think their market expectations, they've priced in 75% chance for 25 bip cash rate cut in Feb.
Yeah.
And then the expectation is if you go through the next, calendar year, then you've got 75 points coming off. And that's the way that the market's
It's always really
priced
hard to call, to go, because you go, oh, will it be Fab? There's 70. Yeah. No one knows until, there's only the RBA that's going to know.
We talk about that on Uncut all the time. Nobody knows, but people like to put in their predictions.
It is tough out there for small businesses and for some large businesses as well. And we obviously hope, for everyone's benefit, that there is a change in interest rates. But it's a pretty tough environment at the moment out there.
Yeah, I think sure, and you've had the inflationary pressure, so everything costs more. People say that you've got unemployment sort of picking up. Consumer spending is retarded. So if it's not February, as I said, the market expectation, the pricing says that the prices are going to the cost of money or the cash rate's going to come off over this next 12 months. And you turn around and say, wow, is it going to be, beer and Skittles for everybody? Yeah. The RBA is not there to sort of, provide, short-term sort of, milk and honey for everybody. It's there to sort of manage slowly and steadily and deliver a stable sort of an environment. So I think that's the expectation. And you say, so what does that mean for small business? And there's different industries and different segments, obviously. From a small business perspective, you say, okay, on balance, no really big changes from, the 24 calendar year to this year. From a consumer perspective, maybe a little bit more sort of, relief in terms of, the cost of money. But, the thing that you temper it with is, well, what does that mean for the cost of housing? And, you talked about, the paucity of rental properties and that the rental properties market is as tight as a drum for resi.
Oh, it is, yeah.
It's sort of something, depending upon which capital you might be in, there could be vacancy rates of, 1.5%. That's basically the time for one group of tenants to move out, the estate agent to get the carpets steam cleaned, if they do that at all, and then the next group of tenants to move in on the Monday.
I know all about it. I'm doing it right now.
Yeah. Did you get the carpets cleaned? Yeah, right.
No, I've got going to inspection. There's like 100 people there.
How
are you supposed to compete with that?
It is very tough.
Well, that's crazy. So you turn around and you sort of say, wow, so I'm going to be careful in terms of what I'm doing with my monetary policy because there's such a paucity of property in the market anyway that, there's tension and I don't want to reduce the cost of money and bump the prices up, which just create another, most things when you sort of move the pendulum from the middle, equal opposite reaction thing. So you turn around and you sort of say, okay, from an economic perspective, that's what the RBA is trying to do and that makes a whole lot of sense, stability and not sort of try to influence anything too much left or right of centre. But the big issue that we have is supply.
Yeah,
so, and it's like any market,
And it doesn't change quickly.
It doesn't.
It's a slow-moving beast.
Yeah, it doesn't. And, interesting, this last period since, COVID's been an interesting sort of period. And if you sort of look at
if you think about we talk about COVID, it's almost like it was a dream, It's 10 basis points as
free money, free money.
But I think if you look at it, the way you approach lending going through broker only, I think that sort of drives home people are doing it tough at the moment. Cost of living, they're sort of forced to go to a broker to look for the best option they can.
They're not going to get funding anywhere else.
75% at the moment market share. We saw LMG predicts it'll get to 80% by the end of the year. So I suppose good news for you.
Look, and I think I talked about, the reason that the broker proposition has continued to grow and the proportion of people that are going to brokers is because they've had positive experiences and what have you. And that's true, but the positive experiences, I will find you a solution in a complicated environment.
Yeah.
If it was easy and anybody could do it and I could just go online and get all of my needs met and put a great big... I'd do it, but it's not. Mortgages by their nature are complicated and the environment's particularly complicated, but complexity of the environment creates opportunity for brokers. And so dealing to complexity, finding solutions for a customer at 100 paces, that's a Wave Money customer. That's a valuable proposition. And then saying, you know what, Alex, I've got you because this is your first loan, your second loan, but I'm going to be here for number 4 or 5. I'm here for you. That's incredibly valuable. And I'll see you when, things are complicated and I'll see you when things are more difficult, but I'll be here for you. And in a tight property market, I was thinking, I bought my first property in Melbourne in 95 and it was $115,000. I borrowed 95% plus capitalised the LMI. And I thought I was really smart because I locked in my interest rate at 10.5% fixed at the time. So you say, and look,
we've all done it. We've all locked high rates in.
But you look at that, I was probably earning, I was trying to think about that. I was probably earning $120,000 or $30,000 per annum. Mm-hmm. Yeah. And so the property time was one times my income, but I got to save 2/3 of nothing, like $5,500, $6,000 to put towards my purchase. And I locked in at 10% and the market went south and I kept paying 10.5%. But, that was my entry. All I needed really was a fair income and an absolute peppercorn in terms of my deposit and away I went. I think of it now, somebody in an equivalent role, and let's look, the median property price across the country is $800,000, yeah? And so you turn around and you say it's $800,000. My monthly mortgage repayments on $800,000 are going to be 4.8, call it $5,000 a month, right?
Amount of money.
That's an entire monthly after-tax income of one person earning $100,000 per annum. Right?
Yeah.
So you need to put two of you together if you're going to get anywhere near the average. But endeavour to do that, yes, I could borrow 90%, but there's fewer options around that. I could borrow 85%. I've got to get that deposit together. So now all of a sudden I need 5% for costs. I need, a 15% deposit at least. So we're turning around and we're saying I need $160,000 saved. I'm earning $100,000 per annum. My partner is, at best, we've been saving $5,000 a month. Hang on, we've got 3 years of absolute austerity and, to get to the market. So it's tough for people to get. I have 5 daughters. So, I know, and they're all at that sort of age. It's like, geez, this is difficult. This is how do we actually help them in terms of getting access to the market? And the more complicated it is, the more people need the help that brokers can provide. And people's emotion in relation to wanting to own a property and secure their future, secure their family's future. They are as emotional about it now as they ever can be. Has been, but we just don't want people giving up. There's solutions. Go to a mortgage broker.
I literally had a mortgage broker save my bacon when I bought in Melbourne. I bought off the plan. I bought from a developer called Central Equity when I was in Hong Kong and redeveloping the South Bank. And I used to sell them adverts in a magazine that I ran, sort of around property investment. And they used to make me, and they'd get an advert and they'd write an article. And I used to have to read the article every month to sell them another advert. And I sort of, after about 7 months of reading about negative gearing and leveraging, and I ended up going along and I went, so tell me a bit more. Anyway, the next thing I bought a property off them off the plan. It was really, really, good property. Anyway, I sort of never had a mortgage before, got really close to settlement, and they were saying, you've got to get a mortgage. And I kind of went around, there were all the usual sort of Aussie banks in Hong Kong. There was ANZ and CBA and Advance Bank at the time and Westpac and NAB. Got turned down by all of them. I sort of meandered around. They took like 14 days each time to turn me down. Anyway, got to sort of like 1 minute to midnight and the developer said, you're going to be in real trouble. And it was back then it was sort of an 80% mortgage. Anyway, they flew a mortgage broker out from Perth. And by this point, I was sort of reasonably stressed and she had a quick look at my income and so forth. She went, you'll be fine. Blah, 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 blah. And she went, ANZ. I went, no, they've already turned me down. She goes, don't worry about that. You'll be okay. Because she was experienced. And then, and she said, blah, 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 blah. Oh, and, commission and, $1,200. I went, okay, well, do I pay you now or when do I pay you that? She went, no, you don't pay me that.
Yeah.
She said, I'm just disclosing the commission that I'm going to get from ANZ. And I went, hang on a minute, you've solved this dead set, like a crisis. You're going to get it to a lender that's already said no to me in Hong Kong. And I don't pay you anything for this. So that was the first property I bought. And that was my experience with the broker, and it's never changed since.
Yeah.
So
that solution, and that was complicated then. And you're sort of saying, when was it ever easy to own a home? I think it was easier when I was starting out. I definitely do believe it was easier, but it's complicated now, and it's complicated, and we've gone through various sorts of periods of change. Before the GFC, it was pretty simple. Basically, no doc wasn't a policy, it was a product.
Yes, it was. Yeah,
like,
goodness,
what could possibly go wrong?
Yeah,
and so you've seen some regulatory changes on the back of that.
But we were kind of okay, even with that. And you're absolutely right; it was very lucid. But even then, you saw the carnage that took place in the States. But we kind of got through that.
Well.
We did do. It was tough times, very, very, very hard. But
it's an interesting thing. And if you turn around and you say, was it the regulators or was it the lenders and the senior management? And they both say, it was the regulators, it was the senior management, and maybe it was a happy confluence of the two. We moved very quickly to basically provide sovereign guarantees, which meant that, people say, it was a liquidity crisis.
Yes.
What it was a liquidity crisis. You basically could not raise money to lend, and when there's no money around, that creates some significant issues. And there's some fundamental differences, obviously, in the Australian environment in terms of the nature of the mortgages that we have and the level of, I suppose, leverage that was there and so forth. But we did well, and we travelled through that sort of period.
And lenders worked with borrowers, and borrowers take their responsibilities in Australia very, very seriously. People don't want to lose their home here.
No,
they and yes, arrears kind of went up, but it was a horrible time and a time that I wouldn't want to go through ever again. But
you think of the value the brokers delivered to people
incredible.
over that period. It's fantastic.
Yeah.
And not being a bugger once again, but the difference is if you'd had a relationship with a bank, then you may have had a relationship with a banker. And good bankers become mortgage brokers.
Yeah.
and they move from branch to branch, and you have multiple relationships. How the hell do you track? If you find the right mortgage broker, you can have that one relationship with the broker from Perth all your 30, 40 odd years. That's a fantastic thing. You don't need to relitigate. You don't need to sort of tell this. They know you. They're there for you. You've got a relationship. You trust one another. That's an incredibly valuable thing. And when things are difficult, such as the GFC and the liquidity crisis, then that's when you need a professional there. And when things are complicated as they are now, then having somebody that knows you, that's in your court, that can find a solution, and having lenders, here's the gratuitous plug for Wave Money, having lenders that say we actually understand that people's needs are many, varied and wide, and things are nuanced, and let's take a common sense approach to what it is that we're doing here. Let's work with the broker. Let's seek to understand. Let's work towards a solution, and that if you can have a conversation as a broker with a lender, with a person that's making the decision from scenario all the way through to settlement and beyond, then that's valuable. That delivers outcomes. And so with Wave Money, that's something that we're really, really, really focused on. You know, in an age of AI and technology, we've got the best and the brightest. And of course we do, because if you don't, you're just going to be at a disadvantage. But that's to create efficiency in terms of the operations. But when it comes to making the decisions, then that's about using, you know, real intelligence as opposed to artificial intelligence. And that's about people having dialogue and conversation. Real intelligence beats AI every time.
This is exactly what we'll be talking about on this series. I think it was a pretty successful episode 1. We got 3 more to go.
We've got to stop. We'll keep going all day.
I know we could. We've got to save more content for the rest, otherwise we'll run out.
Oh, we could go all day, Alex. Good. That's been good.
Thank you guys for listening.
Pleasure.
Hope you enjoyed this first episode. Thank you to John for joining us from
Thanks so
Wave
much.
Money. Alex Whitlock, as always. We'll see you again for part 2 next quarter, is it?
Yes,
I think
Looking
so.
forward to it.
All right, we'll be back here soon. Cheers, guys.
Thank you. Bye-bye.